0.7%.
Okay, welcome to the Swing Trading with Cycles
This year,
channel.
GDP was roughly flat.
You can hear Jerome Powell in the background there. This is a slightly different format today. We're going to be actually listening to the Brookings Institute remarks as they happen in real time. And you can see we'll be watching the charts, as you can imagine, as we do on this channel. And I'll give some live commentary. So first, in terms of the different charts that we're looking at here, this chart here, or this layout here, is the what do you call it? The futures, and this is November 30th. Obviously, it's about 1:37. So Powell has been speaking for a little over 5 minutes now. This is your weekly chart, your monthly chart. Lower left hand side is your daily chart, which you can see has actually just gone green. So this is the ES futures. In the dead center in the middle and the bottom is your hourly chart, which you can see. So far, we have a big green candle, and on the far right hand side, you have your lower time frames, your 15-minute and your 5-minute. And you can see we have these little rallies going. And I've got several other charts kind of going here. This is a chart of different assets. So left hand side, you've got gold and GDX, and then you've got in the middle silver and the dollar. You see the dollar's kind of dumping. These are hourly charts, and on this view, all the charts are the same time frame, whereas this view, they were different time frames to kind of look at the same asset. This is looking at different assets, but the same time frame. So you see on the hourly chart, the dollar is dumping, metals are ripping. So far, right? It's early. He's gonna be talking for an hour. And on the right-hand side, this is crypto. So you've got Bitcoin and Ether. Nice little bull flag for both of them. Bitcoin's bull flag is more weak. Ether's is more flat, just kind of chopping, and Ether has a bullish outside candle for the hourly. Bitcoin is working on a similar one. And that's a good call out. Bullish outside candle for metals. So that's for silver. That's gold. This is not a bearish outside candle for the dollar, but pretty bad. And what we're actually doing is setting up a compound bearish outside candle. So if you combine this candle, and this candle, these three candles will become an outside candle of the previous three candles. So this one, this one, this one. So this is a little bit of a different format, but I wanted to give people a chance to see, how price reacts in real time. And this is another just big picture. This is VTI, which is a total stock market fund. So that's like everything, all of the US stocks. And this is a 5-minute chart. So we're like really zoomed in. You can see they like what Powell is saying so far, the last two 5-minute candles. This is actually all indices outside of the US. So think of this as the total stock market minus the US. And you can see that's rallying, so they like that. And you can see gold is rallying. We already talked about that. We've also got the Dixie on here, so there's a little repetition. Gold is not really coming off the mat much. Let's take the indicators off. This is the total bond market, this lower left-hand corner right here. And it's rallying. And when this thing rallies, it means rates are going down, right? This is not yields. This is price. And dollar dumping, again, as we said. This is your 5-minute chart again. So this is your 5-minute chart of the dollar that's creating that dump on the hourly. And then if you look at the different sectors, right, the different sectors of the S&P, you can see this is hourly chart. All of them are the same level, are the same time frame. They're all rallying, right? They're all have nice big green candles. This is the rest of the sectors. Is there anything that's dumping, like utilities? Nope. Everything's moving in the same direction. You can see big green candles everywhere, as far as the eye can see. So let's turn up the volume on Powell a little bit, see what he's saying. And we'll go back to the intraday chart we're looking at. Yeah.
And a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from...
So he's talking about the labor market now, which is really important. Like that's one of the things that they're going to need to, honestly, they're going to need to weaken a little bit for inflation to come down. And so that's really important context here. And so far, again, we're we're seeing a rally for risk assets and a pullback for the dollar, which is what you would expect. One category of those things will rally, the other will pull back. But this thing, it's notorious. There's notorious these kinds of announcements. I mean, this isn't really an announcement as much as it's just a general speech. But there can be a lot of trappy action, so we want to be careful here. But so far, the reaction has been bullish. And I tweeted about GDX. Let's zoom in here. Let's look at what this does to the daily chart for GDX. That's nice, right? So I tweeted about this. The GDX made a new high for this day 20 of the daily cycle, and we were red. It was a red shooter candle. Now it's actually green, right? And if we continue to move, if we can move up to the highs at 28.94, that will give us a hammer candle. That's really interesting. Let's see what Powell is saying.
Insufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population.
So there's a labor shortfall, which was going to push prices up, right? Supply and demand.
The pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain.
And you can see what's happening to the Dixie on the daily. And so let me zoom in here on the Dixie. So, and I'll turn Powell down for a little bit. So the Dixie has been in a downtrend on the daily. Very clear, right? We went down, we went up, we went down, we went up. Then we went down, but it was a double bottom. And then we tried to go up, and what are we doing now? Potential lower high, right? So now are we going to bounce along the bottom again and bounce up? Or are we going to bounce up and then make another lower low, finally get our move down to 104.5, that area that I've been targeting. But I hope you're seeing this, right? This is the setup for a lower high. And I also would call out this line was drawn before this wick happened, right? And it's not surprising that price reacted to this level. So what is that? 107.223. We got right up there and then just kind of pulled back. And that's the kind of idea that you wait for the signal, see what price does when it gets there, and clearly here it's pulled back pretty hard, right? And it spiked up to there is the important piece.
Half this year, but remain higher than at any time before the pandemic. Wage growth too shows only tentative signs of returning.
If we look at ETH,
some measures of wage,
is this? Yeah.
Down recently,
so
the declines are very modest so far.
A little bit of a double bottom kind of situation here, and now moving up, right?
Well above levels consistent
so this is
inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2%.
So now Powell is talking about wage growth. I mean, it's that kind of thing. He wants to be careful how he talks about it, because you definitely don't want to make it sound like you don't want people's wages to go up, right? But that's obviously not going to help inflation.
Goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall.
Housing, another really big piece of the puzzle. And we all know there's weakness in housing, anecdotal or not. We can see gold made a new high on a spike up. That's good to know. But we're still below this swing high here.
And wage growth remains well above levels that would be consistent with 2% inflation.
Silver made a new high as well. That's good to know about. So everything, Bitcoin's making a new high. So it's going to be a question of, can we hold these new highs as a speech? Well, you can see the S&P is pulling back on the hourly, and that's where it's showing up on the 5-minute. This is the multiple time frame analysis, folks. These two red candles are creating this pullback on the hourly, this upper wick that I always talk about, and you can see it on the 15-minute. These candles are this. So we're going to pause here. We'll pick it back up if he says something that starts to kind of change direction or anything.
Thus, it makes sense to moderate the pace of our rate increases as we approach. That moderation is far less significant than
there it is. He just mentioned that they may start to slow down as early as December, but he's also reiterating that doesn't mean they're going to start reducing rates, right? It's one thing to stop raising. It's another thing when people say pivot, like theoretically, or I should say traditionally, a pivot is when the Fed goes from raising rates to decreasing rates, right? Not just stopping to raise rates, right? And he's essentially saying there isn't going to be a pivot. At best case scenario, we just slow down on raising rates, but we're not gonna which I don't know why anyone would think that he would say anything other than that, because he's essentially said that many times. Let's see, we're seeing a little bit of a pullback here. I think the markets probably didn't like that, right? Let's see, what is the dollar doing? Let's zoom in to the 5-minute actually. Let's see how we're looking down there. 5-minute. Gold is the dollar's trying to rally a little bit here on the 5-minute chart. That's interesting. It needs to get above this candle here. It needs to get above 106.764. Now it's pulling back again. If we go into the 1-minute, we'll be able to see the little red candle. There it is. So I hope this is helpful just as you're getting a view of how the price action develops in real time on those different time frames. Let's go back to the hourly. Let's see how that's shaping up. So that little lower time frame rally is creating a lower wick for the dollar here on the hourly. Let's listen to what's happening with Powell.
It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation is now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as it relates to that third category of core services ex housing. So we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage measures that we look at, I would say that you're 1.5 or 2% above that with current wage increases. So particularly the employment compensation index and the average hourly earnings index. Look at those two. It's about 1.5% higher than what would be consistent, making various adjustments, including for productivity, from nominal wages. So, and as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap in employment.
So now Powell is talking about how they could get a softening in the labor market without job losses, but just by reducing new job openings, which we're seeing are coming down. It's smart on his part to basically try to paint a picture for people where he can be successful in his goal, so cool down the labor market to cool down inflation without necessarily having, millions of job losses. It's smart. It is. And you can see, again, the markets are still rallying. We still have this little upper wick here on the futures. But so far, it's looking positive. And if we zoom into the daily chart, I was just drawing swing lows and swing highs here. Just higher lows, these are a series of higher lows, right? Higher low, higher low, higher low. And that is another higher low, right? And if this holds, that's a higher low. And so this is looking pretty bullish right now. This is not quite a bullish outside candle, but we're now making a new high above yesterday. That will leave this behind as a swing low. So, and again, it's another higher low along this path. Now, what does this mean for the daily cycle low? Does this mean we're getting our daily cycle low? And this is ES. Let's actually flip to SPX really quickly. Right, how does that look? Right, so because SPX is going to look a little different, right? So for SPX, this is our daily cycle high so far. That was Friday, day 30. And so, is this possibly our daily cycle low, this little tiny decline? Or are we setting up for, and because, these kinds of things are notorious for a reversal the following day. Are we setting up for something like that and then that, right? And then we rally out of it? We'll have to see. And again, we have the jobs report on Friday, so this is by no means the final word on how the market is going to react to this week's catalyst. But this is definitely giving us, at least the way this is starting, No, that's not what I meant. At least the way this is starting, it's definitely a bullish reaction. Let's go back to this chart. Is the dollar still dumping? More or less. We still have that lower wick. This is your hourly. What does the daily look like for these guys? Oh, great. This is freezing on me. Okay. Pull it. So silver's looking pretty strong at the highs for the day. Nice swing. Yeah. So you think about for silver, is it possible that was our daily cycle low? This was a little back test of it, and now we're moving higher. I tweeted about the fact that platinum is, let's see how platinum is reacting actually. XPT USD. Okay, that's nice. So platinum had started the day. I tweeted about this earlier, making a new high on day 7, and I don't have the counts on this because it's a different chart. But we haven't lost that, and if we go down to the hourly, what's happening with our friend platinum? Where are you? Here. Nice bullish outside candle on the hourly chart for platinum. That bodes well. That bodes very well, folks. Now, we haven't even started the questions from the audience. That'll be interesting. People try to give pointed questions to the guy. But so far, bullish reactions. GDX is trying to test that top that it created. Let me go back to the right. So that's your hourly candle that created that ugly bearish topping candle on the daily. We consolidated kind of around inside the range of it. Now we're making new highs, and so it's off to the races to test that. That's a pretty violent intraday reversal. Look at silver, high-ho silver. And the dollar continues to dump. Okay, this is interesting. So I think we'll leave it at that. If, obviously, if things change dramatically by the end of the day, it's just about coming up on 2 o'clock. We'll definitely report on that via tweets and maybe even a video update. But I hope this was helpful in kind of visualizing some price action really in real time. Look at crypto trying to break out of this little bull flag it's been in. Very nice stuff here. So thanks for watching.